All right, let's get started. Good morning, everybody. Welcome to month 3 of the Business Startup Series. This month is structured the same as before, with today's presentation by SCORE Madison mentors on the various legal matters of starting a business. And I'm so very glad they are here to explain it all to you. The session that is 2 weeks from today, so 2 weeks from today exactly, is your opportunity to ask questions of the mentors after going through the roadmap material homework that is in chapters 6 and 7. And we will have a special guest in 2 weeks, Beth Russell, she has snuck into our meeting today to listen along, so she is here as well. She is a trademark and copyright attorney, and she will be giving you some additional expertise 2 weeks from today. Today's presenters from SCORE are the mentors Ken Wondrow, who you've seen before in previous sessions, and Greg Sheevy. As in previous months, we are recording today's session, and so thank you for keeping your cameras and your microphones in the off or the muted position during the slide presentation. So Ken, I will hand it over to you.
Okay, good morning, everybody. Welcome aboard. I'm going to get my slides up here for you and get in presentation mode. I'm hoping that everybody can see what I'm seeing anyway. As Kara said, today what we're going to talk about is the basic legal structures and some of the required services that you want to think about when you're starting up a business. The items that we're going to talk about are pretty much critical in the first phases of starting up your business, and that if you pay attention to these, you have a much better chance of being successful. Ignoring these can lead to some kind of disastrous results if you're not careful. So without further ado, the first place we're going to start with is what's in your name. If you've already chosen a name, that's fine. If something that we talk about today makes you want to change that name, understand that there are methodologies for doing that. If you haven't registered that name, you're pretty free to do whatever you want to do. So what's in a name? DBA is referred to as doing business as. Your name that you choose should identify your brand. So what do you want people to recognize about you? With Coca-Cola has a huge branding campaign that if they simply hold up a can of soda, even with Coca-Cola's logo not showing on it, people pretty much recognize the colors of that can. If they have an ad and the polar bear shows up, that's their brand. Everybody knows that that's Coca-Cola that's being presented there. Next time you watch a movie, look in the background at the different products that are putting their brand out there that are totally recognizable even without anyone putting up as an ad. Your business name needs to do the same for you. Your business can use your name as a DBA, but is there something more catchy than that? The difference between DBA and a registered name, which we're going to talk about later, is that a DBA is just the way you want people to remember you, whereas the registered name is that legal entity that you're putting out there for any legal reasons or for tax reasons. We're going to talk about trademark. Trademark is basically a logo or symbol that identifies your business when it's seen. Again, if you're watching an ad or you're picking up a product, if they've registered their trademark, you'll see that little R in the circle and then whatever name they've registered underneath that. That's that trademark. A trademark says it can be legally registered for protection. Once you have a register or you've registered your trademark, then no one else can use that, or at least you can challenge their right to be using that. And then we have copyright. Copyright protects the written material and ad sheets from plagiarism. So if you're out there doing a blog, if you're out there, you have flyers that you've produced or informational pamphlets about your material, or maybe it's your material yourself that you're actually selling to the client. In the case of an education or a presentation like this one, a copyright protects you from having someone else pick up that material and use it as their own. Choosing a name, the considerations we want you to do. First off, when choosing a name, it ought to be easy to say. It ought to be easy to spell. it should be memorable, something I can remember that I don't have to fight with my looking it up just to find out what's the name of your business I want to go after. And then carefully creative. When I say carefully creative, we've had businesses out there that thought they had a really neat name only to find out that it had some connotations that were pretty negative, or connotations that could be easily misconstrued into something that they never meant at all. So when you're going to be creative with your name, be careful that it is in fact what you want it to imply. Cautions when choosing a name: is it too close to a competitor's name? If it's so close to a competitor's name, they may be out Googling and they get them instead of you. Is it politically correct? We have to be careful in this day and age that we're not stepping on somebody's toes by the way we code name our business. And then, is the name available to use for a domain name? Now, the test of that is if you aren't going through the process of registering your name, which we're going to go into here. If you're just doing business as, and you go out to get a URL for your web page or for your email address, it could come back and tell you that's already been used. So you really ought to think about, before you go through all the effort of branding yourself, is the domain name out there available? Can you in fact register this name? Setting up your domain name, you'll want a URL to use for your web and email address. The cautions here: keep it short. The longer that gets, the harder it is for someone to put your email address in there. It should be easy to enunciate. The firm that I used to work for went through multiple URLs because we ran into problems. The first time we had it, it was just too long. People couldn't remember it. They couldn't get it fed into their search engine. The next time through, it was hard to pronounce. So everybody had the hardest time understanding what you said when you told them the email address. And then the third variation through, we had this problem with, I'm going to call it alliteration, where they had a lot of S's or F's in the name. It's very hard when you're auditorially picking up an email address to delineate between an S and an F. And if it doesn't make sense, if it doesn't imply your name, again, they're misspelling your email and they're going out to reach for no one. And then finally, you'd love your URL to carry your brand name. Okay, so if you've made that catchy brand name, how do you get that into your URL so it's recognizable? A lot of URLs out there are going to wind up being Gmail or Yahoo Mail, when in fact the really good ones, their URL has their name in that address. But that's something that you have to go out and register and purchase. Your startup roadmap in the series online lists multiple sites for registering your URL. So be sure when you're going through your homework this week, look at those, check out a couple of those, and see if some of those aren't ones that you're going to be really comfortable with. Using DBA, your DBA, as I said before, can be challenged. A company that registers the name can force you to stop using it. In that event, you're going to have to change every place that you put it. So it could be your URL, it could be your letterhead, could be your business card, could be some ads that you have out there. So again, understand with a DBA, it's easy because you aren't going through any registration on it, but it can be you can be forced to stop using it. The DBA as a substitute, this is a little bit different. You've registered a name. So for instance, when I started my business up long ago, I just put it underneath my name. So when I registered, it was Kenneth Wondrow LLC, and I registered that. Nobody else had my name and no one had registered my name, so it went through fine. But I didn't want just to be called as a business Kenneth Wondrow. So instead, I created a DBA that I went by. As long as no one challenged me, I was okay with that. Unfortunately for me, in the time that I ran my business, no one challenged my DBA. So I changed my DBA to Wondrow Tax Service. Now, I could have easily registered that in the first place, but I didn't know this stuff. So instead, I registered a name, but not the one I wanted to use. That's where the DBA as a substitute comes in. But again, be careful because that DBA is not registered. They can take that away from you. You could register your legal entity under your name, and then you could also go register a DBA. You can do both. For next session, we'd want you to create a name for your business so that you could try that out at our next session and see what we all think about it. Choosing the business structure. Several possible business structures exist. Here's where this is my area of expertise. The last steps I was walking on were kind of what Beth Russell does, and she's going to talk to you more about that in our second session of the month, and maybe a little bit at the end of this. But I've been one about setting up business structures for my clients. If you have met me before, you know that I ran a tax business, which I eventually sold. I spent the last 20 years doing tax planning for my clients as well as investment planning. With the tax planning side, I very often had individuals who were working for a firm, decided they could do it better or wanted to do something different than what the firm was offering, and they started their own businesses. This is where they came to, fortunately, they came to me before they did this step, and we helped them through the process. So what I want to do today is give you kind of the structure for that. And then next week when we get together and going forward from that point, if you have questions specific to it, we can try to answer those. So there's several possible business structures out there. One is the first one there, sole proprietor is the default. If you don't register as anything else, you are a sole proprietor. As a sole proprietor, you'll learn in a bit here, you don't have really any protections, but you also don't have any tax complications. It's all just you. The next one up would be partnership. A partnership is kind of misleading. Most people think with a partnership, I have to have a partner. The fact of the matter is you can have a partnership where you are the only member, and then what you'd like to try to register as is register as an LLC. The LLC, the next one up there, is a limited liability company. That's what the LL and C stand for. One step up from LLC, we see people who then move up to an S Corp, which is short for an S Corp, sub S chapter corporation. And then eventually, possibly someone will be large enough or have reason to become a C Corp. The question one is, which one is right for you? And I'm going to tell you that in a business just starting up, the two we really focus on are sole proprietor or possibly LLC, depending on what you need and what stage you're in. One thing to understand is most people can start out very easily as a sole proprietor and decide later they want to become a partnership or an LLC or an S Corp or even a C Corp. That shift is just a tax shift, and that can be done after you've been registered. So differences in the details. As I said, we're going to focus on sole proprietor and limited liability company, the LLC. With a sole proprietor, there's no special tax treatment. Your net income is taxable. By net income, we mean the income that's left after you've taken off all your allowable business expenses. That's your net income. That's going to be taxable. It's going to be taxed on your own personal return at your personal tax rates. Net income is also subject to SE tax. When you're an employee, your SE tax is handled by your employer, and they withheld a portion of your check called FICA and another portion called Medicare. The employer then went in and matched that FICA and that Medicare and submitted all of it to the Social Security Administration into your Social Security account. When you are self-employed, you are the owner and the employer and the employee. You're all three. So because of that, you're going to pay what's called an SE tax. If your net income, say, is $20,000, know that the SE tax is going to be 15.3% of that $20,000. That's on top of the income tax you paid on the $20,000. There is no registration to be a sole proprietor, and thus there's no fee. You just are a sole proprietor by default. There's no separate tax return to file. You report all of your income on a Schedule C on your own personal return, but there is no limited liability protection. If you damage me by what your business does, and I as your customer, I'm allowed to sue you for damages. If your business checking account has $3,000 in it, but I think the damages you've done to me are like 10,000, I could go into court, sue you for $10,000, which would wipe out your checking account of $3,000. The other $7,000 would have to come from you personally. That's what we mean by limited liability protection. With an LLC, there is no special tax treatment. Sounds just like the sole proprietor because it is. You're going to pay tax on your net income and you're going to pay SE tax on your net income, the same as if you were a sole proprietor. So the difference in these two entities does not save you anything on taxes. It only does some legal work for you. Your entity is now registered, so no one else can use your entity name. But there's a fee charged for that. As you'll find out, it's about $130 to register your name. And then it's about $10 to $15, depending on the state, per year to keep that name registered. It may require a separate tax return. The reason I say may is it depends on if you have partners in your LLC. If your partner is a spouse, they don't count as a separate entity or causing you to have a separate tax return. They still allow you to file all of your income on your personal return. If your partner is someone other than your spouse, i.e. a child that's working for you or another partner not related to you, a brother or a sister would also be a non-spouse, those will cause you to have to file a separate tax return for that LLC, which again adds cost and complication. But what the LLC does is it provides limited liability protection. I'm going to emphasize the word limited. The limited says that you're protected against them suing you personally. They can only sue your business and what your business is worth, as long as you've done two things. You've conducted yourself as a true bona fide business, which means separate bookkeeping, tax return, you keeping everything separate. And then second, that you have gone to great lengths, great enough for the court to feel comfortable with it, to protect the public from damages you might have caused. In other words, I had casualty insurance, I had liability insurance. I might have, in the case of a professional, had errors and omissions insurance, some kind of business insurance to protect the public. Without that, the court can say you weren't conducting yourself in a safe manner, you weren't really behaving like a business. So if this plaintiff wants to sue you personally, we're going to allow it. So understand that the LLC gives you limited liability protection, but you have to behave within the rules. Do I need a corporation? I'm going to tell you when you start out, the answer is no. A corporation is going to add a lot of layers of complexity to you. The corporation is the first level where you can maybe start to save on taxes. The problem is it has to be used appropriately. It has to be used within the legal bounds. If you don't do it that way, it really doesn't advantage you. The other reason for a corporation, let's go through those advantages. Either a corporation or an LLC or a sole proprietor allows you to have employees. The corporation just gives you a little bit more isolation on that employee status. Both provide limited liability protection, but again, as long as you abide by the rules. Only a corporation treats the owner as an employee. An LLC, you are really not an employee of your own business. If you're formed as an LLC and you are the only owner, the only member, then the answer is, do I have employees? The answer is no. Under a sub-S corporation or a C corporation, you actually become an employee of the firm, and that's where the tax savings can be. Because you don't pay all the income out to you as a wage, you pay some of the income out as wage, you take some of it as a dividend, you can reduce your SE tax. You do not reduce your income tax, but you do reduce your SE tax. And then the last advantage is, as a corporation, it would allow for the sale of stock to raise capital. This is beyond the complexity of what we're doing as a startup, but this is something that a mentor would help you understand. If you were trying to you had a capital campaign to try to raise money for your business, it's a possibility that you could create a stock and sell that, but it's fraught with dangers if you don't do it right. Disadvantages, you have to file a separate tax return. That separate tax return could cost you anywhere from $500 on up to $1,500 to maybe even $2,500, depending on who you're working with and how much bookkeeping you have. It's more complicated tax rules, to be sure. And then a C Corp actually creates a potential double taxation on distributions. Without going into big detail, you've already received income as a salary. The corporation pays taxes on the income that you didn't take as a salary, and now you want to take that as a draw. Wow, when you take that dividend in, now the dividend gets taxed. So you've paid taxes on your income, you pay on your wages, you pay taxes from the corporate level on the income, and now you're going to pay personal capital gains taxes on the dividends that come out. So you have to be cautious about moving up to a corporation. It's a step that can be handled. Again, grab a mentor, let a mentor walk you through that process. I help people at this level a lot. Final decision, keep it simple to start with. Sole proprietor, you can elect to become an LLC whenever you choose. An LLC can elect to be treated as a corporation for tax purposes. So as an example of that bullet, I start as a sole proprietor because I didn't plan on any of this other stuff. So I'm just a sole proprietor. Now I've listened to this course. I'm going, wait a minute, I think I want to be an LLC. Well, I go out and I register. Now I may or may not get my business name. If I don't get my business name exact, I'm going to register as an LLC under a name that it accepts. And then I'm going to do business as the business name that I was operating under. And now I've got that limited liability protection. If I'm a limited liability company for a period of maybe 2 or 3 years, and now my income is really starting to come up and I'd like to explore some tax savings, I can still elect to be treated as a corporation for tax purposes. That says I'm still an LLC, but for taxes, the IRS is going to look at me the same way they do a corporation. Analyze your potential risk. Remember, an LLC provides limited liability. I had someone come to me who was being mentored, and they said that they had gone to a tax preparer, and the tax preparer said, well, or actually went to a lawyer, I'm sorry. And the lawyer said, well, no, you don't have any liability. You don't have any liability problems at all, so don't worry about it. You don't need to be an LLC. I asked them, what is your business? And they said, I train dogs. I said, describe it. The client comes and leaves the dog with them for a period of a week or more. She trains that dog. In the meantime, she's caring for the dog, feeding it, going through the training exercises, and then she turns the dog back over to the owner. I'm going, is there any chance that the dog could get injured while it's with you? And she goes, man, I mean, the dog could get sick and die. It could get injured. I'm going, that is a huge liability risk. Because if you're working with my dog and I come back to pick up my dog and you say, well, I'm sorry, your dog died. That dog is pretty precious to me. Can your business handle being sued for what I'm about to do? So she immediately went out and reformed as an LLC because she understood there is a liability there. And then seek advice from a SCORE mentor. In the next chapter, we're going to talk about insurance requirements tied to this and court-supported liability protection. We'll get a little bit more into the weeds. That's kind of what you need to think about in this process. Registering your LLC, this is where if you need some help with this, contact a mentor at SCORE and we'll walk you through it. But in Wisconsin, you go to wdfi.org to register your business name. You choose the I want to file tab, and then choose the create a corporation /LLC tab. There's a nominal fee. You can pay that with a credit card. It's a very quick process. You're just going in there, you're saying, here's what I'd like to be called. Make sure that you end whatever name you pick with LLC. You click submit. It comes back immediately and says, that's good, or it comes back and says, it's been used. If it's good, They're going to ask you, do you want to register it? The answer is yes. Now they're going to ask you for $130 to register that name. When you do register it, print the Articles of Incorporation page that they issue upon filing. You can go back and get a copy of it later, but it'll take time and it'll cost you money. If you print out that Articles of Incorporation, that goes into your file, you keep that. The bank is probably going to want to see it. An insurance company may want to see it. If you open up some other ancillary account, they're going to want to see it. It's a really important page, so make sure you print it off. Step 4, you get your EIN. Your EIN is Employer Identification Number. It is a substitute for your Social Security number. A lot of people will go out and get an EIN just as a sole proprietor, even without becoming an LLC. The purpose is they just don't want to use their Social Security number when a vendor or a customer wants to know the identifier for your business. So an EIN gives you a separate identity number. It will identify your business tax structure when you go through the form and you request the EIN. It's going to ask you, are you a sole proprietor? Are you an LLC? Are you a partnership? Are you a corporation? And that's how that EIN is going to identify you. You get that by going to www.irs.gov. You type in SS-4 online in the search box. The site is going to tell you you're leaving the site. Don't worry about it. You're not leaving the IRS. You're going to a different page where those forms are located for online. There is no charge for doing an EIN. It's a one-page form, straightforward questions. The minute you click submit, they come back with your EIN. Record that EIN someplace and print that page. If you wind up at the wrong place and they ask you for a credit card, leave that site. Cancel and leave that site because you wound up in an ad where someone's charging you to get something that's free. Licenses and permits. Some businesses and services require permits and licenses, so you better consider that, at least do the research. If you're opening up a restaurant, you want to serve liquor, you're going to have a liquor license, and those are hard to get. OSHA may have safety and health regulations if you're operating in some place other than your home, or if you're providing a service that OSHA needs to qualify. You may possibly need zoning permits, especially if you're building someplace or if you're going to get a different offsite business site, or even if you're operating from your home, you may find out that there could be a neighborhood covenant that says, no, we're not zoned to have businesses here, so you can't run. And then occupational license requirements. Occupational license requirements would be if you're in the medical field, if you're in a legal field like investment. I had to have all kinds of licensure before I could open up. With taxes, not really, you don't need a license, but again, a lot of people will go out and get that professional license. Research your business specific requirements. Go into the state of Wisconsin and research that. They'll tell you what licenses you're going to need to look into. Step 5, open your business accounts. A successful business has to maintain separate accounts. A sole proprietor, you'll be told, doesn't have to have a separate business account. We will tell you it should anyway. A separate business account gives you a chance to keep better close tabs on the money that you're making or the money that you're losing, which might be a warning that your business maybe doesn't really exist. Sole proprietors can use their Social Security numbers to open a business account. LLCs can use an EIN. A sole proprietor can apply for an EIN to use instead of the Social Security number. A bank or credit union will want a copy of your business license or your Articles of Incorporation. So again, when you did the LLC, make sure you print it. If you go to a bank or a credit union and you tell them that I'm just a sole proprietor and I want to open an account, they may still make you go get an EIN depending on the bank or credit union, because they don't like using your Social Security number. They want it separated from your other accounts. And then possible accounts that you'd want to open: checking, saving, credit card. These are all possibilities. On that last one, credit card, I will caution you, most businesses do not have a need for a credit card. until they start getting employees or they start getting to the point where the credit card helps them with cash flow. But you want to be careful with a credit card. A credit card could create a debt for your business that you didn't see coming and could actually be the reason your business fails. If you use your own personal credit card, the business can still reimburse you for charges that would have been business charges. In summary, we want you between now and next time, create a business name, create a business domain, or at least what you'd like it to be. Register your business entity if you're at that point. Get your EIN and licenses lined up and open your bank accounts. Now, if all you do is explore those between now and the next session, that's okay, because we want you to create those questions for us that we can help you answer. And then please complete the homework and review some of the many resources that are provided in the online module. That's the first chapter here, and it was the main chapter, so I apologize for the time frame here, but I'll go through this next one a little bit quicker. The next chapter, chapter 7, that you'll be working with is looking at accounting, insurance, and legal considerations. This is where next week Beth Russell will add a lot of meat to this subject, if you would. Before we start, think back to why you started this business. What was your skill set? Why were you starting this business? The reason I'm doing this is people start up a business and go, well, I can do my own taxes. Is that what you were really starting the business to do, to become a tax preparer? Is that what you were really good at, doing taxes? I once had a company that wanted to do residential painting because they were really good at painting and they loved to paint. And they said, I think I can do my own taxes. I think I can do my own bookkeeping. I think I can take care of all the administrative stuff. Well, the truth of the matter was they couldn't. And in the process of trying to do it and trying to learn it, they didn't spend any time on their painting business, and the painting business failed. If you want your business to be successful, understand why you started it and what you're good at, and then stick to that. If you have to pay someone else for some other services, there are ways to get that done where you can negotiate the price. Bookkeeping and accounting. We're going to tell you that formal bookkeeping is not required for a sole proprietor. When you get up to LLC, the bookkeeping has to be at least more formal than informal. But again, it's not necessarily a requirement. At SCORE, we recommend good bookkeeping records. Without them, you're never going to know whether your business is successful. You're not going to know how to negotiate to get better prices from vendors, because you're just not keeping track of it in such a way that you can use it as a record. So we recommend formal bookkeeping. One of the easiest formal bookkeeping down there is, I'm going to give you 3 options. One is a good Excel spreadsheet will do it. As long as you understand Excel, you can set it up. Make sure that it identifies your gross income, your expenses, so that it can calculate out your net income. That's what the spreadsheet needs to do. There is software out there. QuickBooks, Peachtree are 2 of the most popular. QuickBooks is probably the easiest to use for a non-accountant. Don't get suckered into Quicken, Money, or Mint. Those are personal budgeting tools. They do not do a good job with business records. And then the third option, contract the services of a bookkeeper or accountant. You don't have to hire a bookkeeper. You don't have to hire an accountant. You can go out and contract with someone who will provide those services, and they'll tailor it to what you need. How much tax planning do you want? How much bookkeeping do you want done? The more you do with them, the more they're going to charge you, but you can at least negotiate your contract. Good books will identify both gross receipts and net income. They will keep track of the inventory when it exists. Inventory is another mistake area. Most businesses don't really have inventory. If you are selling things off a shelf to the customer, so you're stocking your shelf, whether you've sold it or not, you're not just filling orders, then you could have inventory. You probably have inventory. If you're just filling orders, you don't really have inventory. You have materials and supplies. Keep track of all your legitimate business deductions. If you're not sure, ask a tax consultant. Google it. Find out if that's a legitimate deduction for a business. And then provide for reimbursement tracking. As I said, if you're using your personal credit card to pay for items that you then use in your business, the business needs to reimburse you. They literally need to write you a check or transfer money from their account, from the business account to your personal account to cover that expense. Then copy the credit sheet to show that that was an expense. Mileage is a huge one that is missed by businesses. The minute you go into business, start thinking, if the trip you just took to the bank, if the trip you took to go talk to your tax preparer, if the trip you took to go talk to a client, that's business. Record that mileage. Currently, those expenses can be written off at around 55 cents a mile. So please don't miss this expense on your tax accounting. Taxes, as your business begins to produce income, taxes become an issue. Income tax is paid on your net to federal and state. I make $20,000 my first year in business. I have $8,000 worth of expenses, including my mileage that I just told you to remember. That $20,000 is reduced by the $8,000. I'm down to $12,000. That's what I'm going to pay income taxes on to both federal and state. Now, everybody will come to me when I was in taxes and they'll say, well, I'm going to make about $12,000. How much should I withhold in taxes? The first question I ask them is, are you married? If the answer is yes, how much does your spouse make? Do you work someplace else? That's my second question. They go, well, yeah, I'm still working for an employer. Going, add that income into the mix. This income that you make from your business goes on top of all the other income on your tax return. And where you thought you would only pay 20% taxes on that, you might have pushed yourself up into the 28% tax bracket. And now you weren't prepared for that tax liability when it hit you at the time you filed. And then please remember, SE tax is also paid on that $12,000 of net that I just used as an example. And 15% of that $12,000 adds on another $1,800 of taxes that most businesses, when they start out, forgot all about. And they come to me at the end and I tell them, okay, your withholding was great. You got your federal and state income taxes withheld and covered, but you owe $1,800 for SE taxes. And they're going, where am I going to get that from? That's not what you want to do when you're running a business, is suddenly find out that you have an obligation and no money to pay it. If you're subject to them, sales tax must be collected and remitted and reported. Now, most services in Wisconsin are not subject to sales tax, but some are. All retail is subject to sales tax unless you're selling food, but not to the public, not to eat on site. In other words, a grocery store doesn't collect sales tax on food, but a restaurant does. So you're going to have to go to the sales tax division for the state of Wisconsin, at least read the documents, or contact one of the employees there, describe what you're doing. They'll tell you if you owe sales tax or not. The next big one here to understand about sales tax, if you are an online business and you sell out of state to other states, you may have to collect sales tax in those other states. That means that you have to submit sales tax to the state of Wisconsin for sales in Wisconsin. You may have to submit sales tax to the state of South Dakota because you sold something to a client who lived in South Dakota. If you're an online business, sales tax is critical here to understand. Grab a mentor like me that we can at least look and walk you through what the rules are, at least tell you where to look to find out if you owe them or not. As income becomes more positive, estimated taxes may be required. Remember, I just described you were still working, your wife was still working, or your husband was still working, your spouse. You both had withholding going on, and you had a little side business on the side. At first, your withholding might have been creating a refund that covered the taxes on the business, and you either break even or have a small tax due. That's okay. But as that business grows and makes more revenue, you may have to actually pay estimated taxes in to cover that tax liability, or you'll owe the tax plus interest to the IRS come April 15th. If you have employees, there will be payroll taxes. Payroll taxes are critical. If you have an employee and you withhold the SE tax that FICA and Medicare, if you make the mistake and don't submit that, the government looks at that as not underpaying your taxes. They can look at that as theft because that was not your money. The penalties and interest rack up on payroll taxes incredibly fast. I've run into clients that owed $1,000 in payroll taxes, but the bill from the IRS was for $3,000 or more because of penalties and interest for not having filed them. So if you have an employee, seek help right away to make sure that you set that up right and do the withholding and get those withholding taxes paid in. Are you good at taxes? Consider these options. You could take, I'm a business, I just started up, I don't want to pay a tax preparer, so I'm going to do my own taxes. Heck, I've been doing my own personal taxes, shouldn't be any problem. If you're really good at taxes, okay, maybe you can pull it off, but consider these options. One, take a tax course to understand the new business taxes that you're now trying to handle, or at least those deductions. Use a dependable tax preparation software. But again, the tax preparation software is only as good as the information you give it. But it may help you through the process. TurboTax will, in fact, handle small business taxes for you. Or you could contract the services of a tax professional. If you contact a tax professional, please make sure that the services they're going to provide you include not just the tax preparation, but tax planning sessions. They should be sitting down with you a couple times a year and making sure that you're on track. Tax and entity election advice. They should be the one that tells you, you know what, you're a sole proprietor, but you ought to be an LLC, or you're an LLC, you ought to be a sub-S corporation. And then that they charge a fair price for their services rendered. I will tell you that with tax services, there is a huge range. You can have someone do a tax return for $135 versus someone out there who wants $500 for that same tax return. If that person doing it for $135 has no expertise in business taxes, they may not be doing them right. You may be wasting money. So make sure that they're qualified and they're still charging a fair price for what they're giving you. Getting paid, consider various systems for getting paid for your services. Credit card payment availability. Right now, a lot of people you will use Square. That's a really cheap and inexpensive way to go. Understand that when you allow someone to pay you with credit card, you're going to have fees associated with that. So you charged $10 for something, but you're going to lose 4% back to that credit card company for letting them use a credit card. Electronic transfer. So a lot of people nowadays use PayPal or Venmo. And again, there can be fees, but those fees may be a lot less than a credit card. Online bill payment, where they just literally electronically transfer money from an account to your account. That's going to require more setup. And then physical invoicing, that's snail mail. So you're actually going to print out an invoice, mail it to them. They're going to send you back a check. It's not going to cost you anything other than the stamp, but there's going to be time involved and there's going to be the risk of not getting paid. What will be the terms? Contract of terms and late payment you should write out. So if you're going to be, as an example, a painter, and your paint job, you're going to charge the client $3,000 to do the painting job for them. What's the contract here? A lot of times there's a down. I want some of that money up front. I'll get the rest when I complete services. But within my terms, I'm going to say you have 90 days to pay that, or you have 30 days to pay that. After that point, I'm going to add interest. The client needs to know, the customer needs to know what those are. If it's business to business, the possibility of crediting. Now, business to business means I'm doing a service for a business that I'm also doing business with. So I'm using supplies from them, but I'm providing them a service on the backside. There's a possibility of crediting back and forth. Be careful. People have the misnomer that I can get into a barter situation. I'll do this for you, you do this for me, quid pro quo. And we won't charge anything. So then there won't be any income, so no one has to pay taxes. That is a false statement, and the government will shut you down if they catch you doing that. Credit back and forth. If the charges are the same on both sides, Well, you'll have the income from the charge, but you'll have the deduction for the expense. So yes, it will wipe out your taxes, but it'll do it in such a way that the IRS says you reported everything. Paying yourself, the adage is pay yourself first. I had so many customers would come, or clients would come into me and say, well, I started a business and I know you're supposed to pay yourself first. So I did that. I'm going, well, what did that mean? They said, well, I took all the money that I had in the checking account and gave it to myself, but that wasn't enough to live on. So I took a loan from the bank. I literally had clients who took a loan from a bank to pay themselves because there was not enough money in the business checking account. The clue here is if there was not enough money in the business account to pay that, then there wasn't income in the first place. And by going out and taking a loan to give yourself income, you just paid taxes on your own money. So without money in a company account, it's not possible. Think about considering leaving some money in the business. This is called investing in yourself. That investment in yourself is the same as paying yourself first. You left the money in the business so the business could advertise. You left the money in the business so the business could hire the employee it needs. You left the money in the business because it needed that money to expand the business. That investing in yourself is paying yourself. Options for getting money from the business, you could do it annually, quarterly, or monthly. It doesn't matter. You transfer the money from the business account to the personal account. You could do it with a check or you could do it with an electronic transfer. That's how you get the money out of the business. Whether you take that money out of the business or leave it in the business, it's still taxable income. So leaving it in the business, if I made $12,000 and I left it all in the checking account, I still pay taxes on those $12,000. If I made $12,000 in the business, I left $3,000 in my checking account and I took $9,000, I still pay taxes on $12,000. Just make sure you understand that. There's no regular draws unless there's excess cash in regular occurrence. Again, I've had business who started up and they said, well, I'm paying myself $1,000 a month. I'm going, do you clear $1,000 a month? They're going, well, some months I do, but a lot of months I don't, because I'm kind of seasonal. I work really a lot in the summer, but not in the winter. I'm going, well, then don't take monthly draws because you're really just drawing down cash off your checking account that you may in fact need to pay bills. Take money when it's available. If you've got a really nice regular cash flow coming in, yes, take regular draws. Paying others, adhere to the terms with your vendors. If they've got, you don't want to get late payments racking up and you don't want to be paying interest. You want to be able to pay your bills as they come. Now, if the vendors that you're using are giving you a 30-day float, well, that's fine. Take advantage of that 30-day float, but always make sure that when that 30 days comes up, you have the money available to do that. This again is an area where businesses fail. They go out and they rack up a lot of bills. They don't get them paid. Now they're paying interest, and that interest is generally way higher than a bank would have charged them, and they're going in the hole. Keep adequate funds in the company accounts. The courts will tell you that if you don't keep at least enough in there to pay a month to 3 months worth of bills, then you are raiding your own accounts and they can take away your liability protection. So you do need to keep some money in there to handle your bills. And with the vendors, the rule is negotiate, negotiate, negotiate. In other words, the more I shop with a particular vendor, I ought to get some discounts along the line, or at least I ought to be able to negotiate some better terms. Maybe I get a longer float period. Maybe I get better credit from them, but negotiate with those vendors because in the long run, expenses are what kill all your profits. If you can lower your expenses, you can live on your income. If you can't lower your expenses, you're forced to raise your cost to your own employee, your own customers, and in that event, you may lose your customers. Step 5, legal considerations. You may need a lawyer to write contracts. You may need contracts with your customers, especially service providers will need contracts. You may need contracts with your vendors, especially if you're having shipping and suppliers, and clearly if you're having stuff shipped from out of the country. There may be government regulations. You may have to have separate licensing. You may run into import and export duties. I never considered import-export duties, and one of the first businesses that I mentored wound up having their supplies shipped in from India, and they ran into export problems right away. So consider all these things, and that may be the need for where you step in and have somebody who handles those legal issues for you. And again, contract with that lawyer for the specific needs that you have. And then resources out there, if you're trying to do legal on your own, apologies to Beth Russell, who's probably shuddering right now, but you could use LegalZoom, and there are boilerplate contracts out there on Google search, but please understand with this, you're the one that's at risk. You've decided that those things work. There's going to be all kinds of disclaimers on them saying, well, you can't come back on us. You elected to use that boilerplate contract. So see what you really need and then consider, do I need legal help in this? Can I handle this on my own? Step 6, what's at stake? Risk assessment, I talked about it before, should include but not limited to, first off, your liabilities. Do you have general casualty? So property damage to your own equipment and property. Physical liabilities, if I get injured while I'm in your place of work, consider, a lot of people say, well, I have a home business, so I don't have that problem. You have an even bigger problem because they're coming into your home. Your personal liability insurance on your home may not cover that if they find out you were doing a business and not telling them. If you tell them you have a business, they'll probably increase your liabilities, maybe a slight increase in your coverage or your premium as well. Professional risks, if you're, for instance, when I was doing taxes, if I made a mistake on a tax return, people would probably come to me and say, look, you owe at least the interest, but I think you owe the taxes. Well, errors and omissions insurance was the insurance that I carried to cover the risk that I was taking there, that I made a mistake that was so costly that I couldn't cover that myself. Consider consultation with an insurance agency for liability analysis and best coverages. I personally like an independent insurance agency because they'll shop the different policies that I might need. One company may be good at liability, another company may be better at casualty. So seek help from an insurance agent when you're looking at the coverage you need. Keeping it all safe. Step 7, location. Where and how are you going to file or store your files? On your computer, laptop is not safe. Your laptop can go down and you lose all your files. Your laptop could be stolen. Now somebody else may be able to get into your records. Where and how are you going to store those files? They could be physical files or they could be electronic files. You might be using cloud storage. Security, if you're doing anything where you have customer information on your software, consider customer privacy. You probably ought to have encryption software at the very least. Antivirus software to protect the business from being attacked from outside. Wrapping this all up, as you go through chapter 7 on the start road-up map, I want you to complete the homework, but look at some of the different resources they have in there. You've got a lot of different links that are given to you that you can go in. And remember, you can go in and out of this page. So you can go back in at a later date and say, I remember there was a resource on there. I'm going to go and get that. Or print off the page so you at least have the URLs. Visit our website at www.madison.score for additional resources and webinars. You can go deeper into any one of these topics I talked about today. And if you haven't yet considered requesting a mentor, please consider it. Our services to you through SCORE come to you tax-free, not tax-free, cost-free. You're not going to pay anything for our services. You can use us as often as you want to use us. We will tell you when you're asking us something that either we don't do or can't do. We will find a resource for you when we can't cover it ourselves, but you're not going to pay a charge to us for those services. So take advantage of us. I want to thank you today for listening, and we'll see you all next time. And I'm going to open this up for Q&A and go back to Kara and ask if there's questions that are out there that we ought to cover before we quit. And I'm going to stop presenting here.
Yes, we have a couple questions.
Okay.
And I'm getting a little feedback from my mic. Can you guys hear me okay?
You're a little quiet.
I'll try to speak up. All right, we have a question about LLCs. Is a single member LLC okay? Any issues being a single member LLC?
No, in fact, most LLCs they start out as single members. And remember that if you and a spouse own a business together, and in Wisconsin, technically your spouse owns 50% of your business under marital property, that's considered one member in there. So most LLCs will start out with a single member. The LLC is a framework that allows me to add a member in later. I could add in a partner pretty easily with an LLC. With an actual partnership, it's a little bit more detailed, and a partnership in and of itself would file a separate tax return. But yeah, single member LLC, perfectly fine.
Okay, and then Brian was in the process of applying for an EIN while you were talking. So he said the IRS was asking for a start date, and what suggestions do you have? If you haven't actually started selling, you haven't started your business yet, what do you put in for the start date when you're applying for the EIN?
I would probably, this is kind of, doesn't have a clear answer here, but I would probably, in the case of not having started up, I'd put my start date as the date I applied for the EIN. The issue with an EIN is once you ask for an EIN, you're bringing attention to yourself a little bit more than you were as a sole proprietor to the IRS. As a sole proprietor, the IRS doesn't even know you exist until you file a tax return. With an EIN, you're telling them, hey, here I am. I'm at the very least intending to have a business. Um, if the start date is the date that you apply for the EIN, you may get a letter down the line going, you haven't filed a tax return. Just reply to that letter is that you aren't physically in business yet. You had started the business, but you aren't physically selling.
Okay, and then Beth, thanks for your comment. Before forming an LLC, consider the pros and cons of choosing management by a member versus management by, management by a manager versus management by the members.
This is true. You're saying that's from Beth Russell. That's a
Yes,
recommendation?
yes.
Is Beth got her mic on that she can answer that? I'd love her to expound on that because I agree.
I can. Can you hear me?
Yep.
Yes.
Um, it's something that I see overlooked a lot, and the difference is that if the LLC, if you pick management by the members, any member can go out and sign a contract for anything and bind the LLC. And if it's managed by a manager, only that manager has that kind of power. So management by a manager is a safeguard, but then you have like single people like, well, I don't care, I'm the only member, it doesn't matter. The danger there, I still say choose management by a manager and make yourself the manager, because over time you grow, you might take on other members and forget about this. And then all of a sudden, those new people can go out and sign contracts and do potentially dangerous things. So my recommendation is usually choose management by a manager.
Excellent. Thank you, Beth, for that. I agree. You a lot of times won't ever think about it up front. You may never run into it, but when you do, you've created a nightmare. So stave it off at the beginning.
Is that a selection you make in the application process for LLC? Is that an actual choice that you make off
It
of that?
is. It is, and and a lot of people just gloss over it. They're like, it doesn't matter, just pick one. But it's something not to be ignored.
Yeah, it's one of the questions on the application.
I had a question, Ken, while you were talking about business entities. If you start off as one and you change to another, which happens probably pretty regularly, when you're doing that, it's likely to be in the middle of a tax year. So what happens then when you're preparing your tax returns and you've made that switch in the middle of the year?
If you're going from sole proprietor to LLC, it's not going to be a major problem. Technically, we're going to get kind of deep into the weeds here with taxes. It's technically you're filing a short year tax return to close out one, and then a short tax year to finish up or begin the other one. If it's a sole proprietor and LLC, because they're both coming back down onto the same Schedule C, it's probably not going to be a problem to put that all onto one tax year's tax return because the tax handling of it is exactly the same. The big problem is when someone moves from a sole proprietor to an LLC and then makes the LLC a sub S corporation. So I said this gets technical. In there, technically you have 2 short years, but again, the government says, well, if you file a Schedule C for all the sole proprietor LLC stuff, and then you file the tax return for the sub S corporation and bleed that into your other return, it'll all come out. So generally, you're not going to run into a big problem. Where employees, payroll reporting, or making yourself an employee of your corporation, yeah, then you're going to probably have 2 different tax years in there that you're going to have to blend together. Again, there's where I would tell people, don't try to do that on your own. Go into a tax preparer or tax planning service and explain to them what happened, and they'll get you through it. It may be a little bit more costly in that first year. Just understand that to start out right is better than to try to fix it later.
Indeed. I thought of one other. Oh, you were mentioning, figuring out the credentials of a tax preparer, and how do you really find that out? How do you really know that they have good experience doing taxes for small businesses?
Kind of the same way you do any other business. You can look them up in the small business guide to see if there are the consumer reports to see if there were any complaints, any business complaints against them. That would be one. You can certainly ask for their credentials. In the area of tax preparation, I told you I don't have to be licensed, and a lot of tax preparers are not licensed. They don't have anything that says they have any education requirements whatsoever. They're just doing taxes. If they are an accountant, they're going to be a public accountant or a certified public accountant, a CPA. If they're an enrolled agent, which more and more tax preparers who are not accountants are becoming enrolled agents. An enrolled agent, again, is called EA, and that's a status that says they have to have 25 or 24 hours of credit every year, including ethics. So those credentials are at least the starting point. Looking to see if their businesses had any complaints registered against it is the second level. The third one is interview them, sit down and talk with them and ask them, okay, here's what I've got. What do you think that tax return will cost me if I use your services? They'll give you an estimate of cost. Now ask them in the next part of that interview is, will that include tax planning sessions where I can come in at other times during the year, or do I pay extra for those? You really, with a good preparation service, you shouldn't have to pay additional for tax planning sessions, probably in the neighborhood of at least 2 more during the course of the year besides the tax prep service. A lot of them will want to meet with you quarterly to keep you on track. Ask them if they do bookkeeping. If they do bookkeeping, do they charge separately for it? It's like it's anywhere else you go. You just want a menu of the services that they provide, and then compare that up to the cost that you're going to pay. The one thing you cannot do with tax preparation, which too many people want to do, is they want to equate it to an hourly fee. No qualified tax planner should be charging you by the hour. My problem with charging by the hour is I'm not going to want to do any more planning than the hour I gave you or the half hour you want to pay for, and then we're done. And that's not planning. My tax prep for you, I want to go through it as fast as I can. You want me as customer to go through as fast as I can. I want to take my time. You should understand that the education behind it, the processing, the mailing, the overhead for that are all part of the overall cost. So compare cost, don't compare hours.
Good information. Thank you.
Any other questions out there? Looks like
Don't see anyone typing.
okay. My not a disclaimer, more sort of. We understand that these presentations, when we do them online, have to be reasonably generic. Um, each one of you out there is going to have a specific kind of business, and that business is going to have specific needs. One may have lots of different legal issues, another one may have no legal issues. One may have a lot of tax complications, another because they have a lot of different style deductions. Another one might have very little. I always told a business when they started up, if you were in consulting, um, I'd want to see you make a profit margin of at least 50% or better, because as a consultant, you really didn't have a lot of overhead expenses. Maybe some mileage, maybe some education, maybe some paperwork, but that was about it. Somebody was in service, I would tell them, in a service-oriented business, maybe somewhere around a 35 to 50% profit margin, because you have the chance to charge the supplies back off to the customer, and you're really just they're paying you for your service, and generally that should get you back over to that 50% line. So the combination maybe about 35%. If you're in retail, retail will tell you that it's cutthroat. A lot of retailers will start out they're lucky to make 10% as they're clear, where others, as they go along and they can start negotiating better contracts and better terms, they got better cash flow. They reduce their overhead expenses because of repetitive processing. They maybe get up to 20-25%. But a retail operating at 25% is considered pretty successful. One existing at the 10%. If you can live on it, that's fine. If you love what you do enough that you can live on that at that level, but you want to try to get that increase back up. So that's just some general tips, and it kind of goes back in with how much do I pay for the services that I need for my business. Negotiate them wherever you can, and just remember, if you try to do a service on your own that you're not skilled at, you may be creating more damage to your business than gain. And down the line, it may cost you twice as much to fix that damage to save the business than it did if you had just contracted to begin with. Think independent contractors before you think employees, but make sure you understand the difference between an independent contractor and an employee. We didn't get into specifics here, but that's something to sit down with a mentor or look online, because we have sessions in there to delineate between an independent contractor and an employee. Thank you for giving me the opportunity to be here today. Thank you to the Hedberg Library for going to the extent that they have to coordinate this kind of service. This is a huge benefit that the library offers to the business community out there. The coordination between entities like SCORE and the SBA and the library and chambers of commerce, for that matter, are what help you as the small business start out right and become successful. So thanks again.
Yeah, Ken, we did have one more follow-up question to the EIN. It may be one that maybe you and this person would want to investigate outside of the meeting, but the EIN or the IRS wrote back and said they couldn't assign an EIN, and this person needs to call them for assistance.
I would suspect, but I don't know. something inside the application where the box that was checked into line, or the EIN, they may have skipped the box where it says, was the EIN used? Did they ever have an EIN before? And if they did mark yes that they had an EIN before, they had to explain how that's different than the one they're applying for now. So it might be that. I couldn't tell you for sure. I do agree. Yeah, you could call the IRS. You may have a long wait on there. Could go through and take a look if they can print out what they had filled out in the application. I don't know if they can still find it. Again, somebody might be able to sit down and spot what went wrong in there, or why the IRS needs more information.
Okay. All right. If there aren't any other questions, we can wrap up this session. Again, the next session is Tuesday, April 20th, with another chance for you to ask questions after going through some of the homework exercises in the SCORE roadmap, chapters 6 or 7, or both.
Kara will also, at that point in time, my hope is that Beth will join us and give us a kind of some more background on trademark and copyright and patent and why those are so important, and then some of her expertise and some of the things that she's run into setting up an LLC.
Absolutely. We're happy to have Beth. Beth number 2 join us. We have 2 Beths. I do see someone typing, so I'm going to hang on and see if they have a question.
I didn't, while you're waiting, I didn't get a chance to explain to our attendees that you got to see me performing live from Kiwa Island in South Carolina. This is not my office. I had this, we kind of got forced into the reservation we could take to get the VRBO. So when I talked to Karen, said, as long as I've got internet out there, I will take a little bit of time out of my vacation and address the crowd. So I've got an alligator sitting in the pond just outside of my my screened-in porch.
That's the beauty of the virtual environment, really. That's been key for the success of this startup series, really. So thank you for taking time out of your vacation. We appreciate it. Well, I didn't see a question come in, so I think we can wrap up for today. Hope everyone has a great rest of your day and a good couple of weeks, and we'll see you back on April 20th. Thank you.